Welcome to Real Estate Radio Live, an informative and engaging podcast discussing everything you need to know about the world of real estate. Your host, Joe Caccera, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management strategies, new construction advice, home improvement tips, and much, much more. And now, to guide you around the world of real estate, here's your host and Real Estate Radio Live team leader, Joe Caccera.
Welcome in, Joe Caccera with Real Estate Radio Live. Thank you for those that are watching us on the live feed on Facebook today. Thank you for those that continue to follow the show in a couple different ways. We love the fact that you take the time to watch us on the live feed on Facebook, but we'd love to have you download the podcast. That's really the best way to really stay in touch with the show. We'd like you to download the podcast. That way you can listen to the show at your convenience when it's good for you. A couple different places. You could just type in Real Estate Radio Live anywhere. Google, you go to iTunes, type in Real Estate Radio Live there. Or you could go to our website, RERL-1540-Bill, type in, or just go to iTunes or get the podcast right from the website. We're typically try to do the shows, keep it on schedule for everyone, Tuesday, Wednesdays, Thursdays. Right around 3 o'clock Pacific Standard Time. We want to try to stay consistent for those that are watching us on the live feed on Facebook. And then this becomes the podcast, of course, so make sure to look for that. If you miss any shows, you could always go back and listen to the past shows as well. Again, Tuesday, Wednesday, Thursdays, right around 3 o'clock. If you need to reach me during the week, 408-838-9060, or you could always email Joe at reradiolive.com. Before we get started, just a reminder, we have a series going on for the month of August. We really started late July. We're going to go into August, and that is we're interviewing a lot of the executives, owners for the real estate companies in the Bay Area and getting their feedback and information. The series is the future of the real estate industry, so we're having these executives in there ask some questions about technology, how the industry is changing, will it change, what their competition is going to look like. So we're going to continue that series tomorrow. We have the Sereno Group represented, so they will be here and in studio, be interviewing them tomorrow. So we want to tune in and be sure to catch that show. All right, let's get started. Most of you know the focus of the show is education and information. What we do here at Real Estate Radio Live is work hard to have great guests like today, provide you with content information to help you make wise decisions in and around your real estate. So one of the most important decisions you make is what you do with the equity in your home. Do you keep it? Do you buy it? Do you sell it? There's a lot of things you could do with your property in your home. So Mr. Bill Benson's here to talk about reverse mortgages. He is a regular visitor to the show, and he's our resident reverse mortgage specialist. Bill, welcome back.
Thank you for having me back, Joe.
You like that title?
Resident specialist?
Yeah. It's pretty good, don't you think?
That sounds good.
We'll go with that one. Known Bill a long time, good friends, and he takes care of people on the reverse mortgage side, so we're going to talk a little bit about that and give you some details. It's a great, great product for the right person. Quite a bit around here you hear house rich, cash poor. You hear a lot of people that have been fortunate enough to buy homes, and they have all this equity. And then oftentimes later on in life, you're short on cash. Maybe you don't have a pension, maybe Social Security, maybe something you didn't invest. Maybe, you ran across an emergency or some health problems where it really took a lot of your savings or, assets away. That happens to a lot of people. There's all kinds of reasons why you might need cash or set something up to, use the prospects of your property to do that. So before we get started on the topic, Bill, why don't you give the listeners a minute or so about your long, great background and then your current roles and responsibilities, what you're up to now.
Okay, Joe, my long, great, okay. Well, I've been in sales since about 1902. And Started early, right out of the Navy. The last 35 years been selling mortgage products. Mm-hmm. And the last 12 years, I've specialized in reverse mortgages. Right. I'm a senior now myself, have a reverse mortgage myself. And it's a rewarding product to be involved with. I've literally saved a few dozen homes for seniors who wanted to stay in them.
Yeah. No, it is good, and we're going to go on the details of that. Bill's going to explain the details. Those if you're listening to the show, of course, if you're watching it now, but if you're listening to it later, if this might apply to your parents, your grandparents, an aunt, an uncle, any relatives, friends, neighbors, if you run into someone or you're having a conversation and they appear to be struggling or trying to figure out maybe what an alternative is to financing, because as we know, forward loans, you have to make payments. Reverse mortgage is a little bit different. So maybe what we could do, Bill, is I always like to, give the audience information and assume that, they know very little about this, and some people may be experts at it, some people may be novices, and some people may not know anything about reverse mortgages. So maybe you could just give us a minute or so of an overview, simply put, what is a reverse mortgage and some of the requirements that people have to, maybe age and some basic overviews.
Joe, reverse mortgage product has been around for 20, 25 years now. Mm-hmm. And it was formed by the federal government, FHA, under the Housing and Urban Development. And the original intent, and still the primary intent, is to allow seniors to stay in the homes that they love after retirement and to live their lives comfortably.
Yeah.
They have to be 62 or older, have to have good equity in their homes. The older they are, the more they can get. Mm-hmm. The lower the interest rates, the better for them. And, of course, interest rates are historically staying low. And then, of course, the higher the value of the home, the more they can get as well.
Right. So most of you are familiar, or maybe you're not, but let's say on a forward, let's call it a forward regular residential mortgage, you might see, like I could get someone to help people with the regular mortgages. If you come to someone like me, we do financing for a refinance or purchase. Let's say you get a $400,000 loan. That's called a forward mortgage, where you were actually making payments on that mortgage over a period of time. Let's call it 30 years. It's amortized over 30 years, and some people pay them off and some people don't, and they'll refinance again. So that's the forward mortgage. The reverse mortgage is just the opposite, I guess, or kind of, right, Bill? I mean, you could get money from your home, and the good news is you have no payments.
Exactly right, Joe. A lot of reasons, different reasons for them, just to live on.
Right.
To pay off a forward mortgage that they can no longer afford.
Good point. Yeah.
To help family, help grandkids with college education, possibly invest it in something they really want badly to invest in. And they can draw a substantial amount of money with no obligation to a payment. There is interest on the loan. That interest accrues over the years. The equities that we see, the values we see here now in the Bay Area, San Francisco Bay Area, where we live, there's plenty there to use for themselves or other purposes and still have plenty of equity left for the kids.
Yeah. So I think what you just said is for people out there listening, again, if you know someone like this, one of the beautiful parts about a reverse mortgage, just one of the options, you mentioned it, Bill, let's say you're, again, 70s, 80s, and you have a $300,000 or $400,000 loan, and it may not sound like much, but when you're on a fixed income, that could be a lot. I mean, that could be a couple $1,000s a month, including your property tax, but your mortgage payment could be still. One of the options would be they just come in and a reverse mortgage takes out that forward mortgage, right? And then you get rid of that payment.
That's correct.
Yeah.
That's correct. Let me give you an example.
Okay.
And I haven't met this lady yet. It's strictly a telephone conversation. But she was referred to me by another senior. And she's 81 years old. She has a home that's probably worth a couple $1 million. She does not want to move. She loves that home, and she is handicapped to some extent. I'm not sure what exactly that is because I haven't met with her yet. But she owns the house outright, no loan. But what she's interested in is having the ability to stay in the home. She's starting to feel pressure because her cash reserves are dwindled way down.
Okay.
And she wants badly to stay in that home, even though she's handicapped. And this would give her the opportunity to use the funds, the equity in her home, to stay as long as she possibly can until she passes away or moves out, has to move out directly, and still probably pay for in-home care.
Yeah.
Typically, not as much early on, but as she ages more, she'd need more and more. And I'm going to be meeting with her either Friday or early next week with her family She's got 3 kids, and they're all going to be around over the weekend, and I want them to all understand who she's talking to and what she's thinking about.
Right. No, that's great, and I think we're going to talk about some different options for a while, how you could do this, Bill, because I think that gets people's memories, or they're, just thinking about these. You had made mention, it could be someone that's paying off a mortgage. It could be someone that doesn't have a mortgage, but they want money to either live on or maybe do something else with it. I mean, you brought up a very good point. I mean, home care. Someone that wants to stay at their home. I mean, let's say they have no mortgage. They could take out potentially $300,000, $400,000, $500,000, depending on the value and all that, potentially, just as an example. And they could use that money to take care of themselves during the in-home care, correct?
That's exactly right.
Are there any limitations on what you could use these funds for?
No, there's not. The funds can be used for anything the senior needs or wants.
Right.
Extra travel.
Right.
I mean, it's
pay bills, college tuition, anything.
Anything.
Yeah, that's great. And it's a great tool to be able to use. And keep in mind, the primary reason for this is to access money and change your lifestyle or assist yourself in your lifestyle without monthly obligations. I mean, that's the beautiful part about the reverse mortgage.
Yes, it is.
Yeah.
Yes, it is.
So are these billed just for primary residence, or are they good for second home, investment property? How do they apply?
No, it has to be for your primary residence, and it's good for as long as you stay in the home.
Okay.
Until you pass away, or when the time comes that she has to move into assisted living.
Okay.
Then when she moves out permanently, then the loan will become due. Now, her family at that point in time would have the option to pay off the loan and keep the house, or to get the house sold and pay off the mortgage.
Okay. You said 62 or older. Is that correct?
That's correct.
So if you have a couple that, let's say someone's 65 and someone's 59, does that still apply for that one person as long as they're on title? How does that work?
So long as they're on title, no.
Okay.
There is a tool now where the reverse mortgage could be done with a line of credit. And the spouse that is under 62, if the older spouse were to pass away, she would be able to stay in the house, but wouldn't be able to draw any more from that line.
Ah, interesting. Okay.
That brings up a point.
Right.
There are 3 ways to take the money: lump sum, line of credit, or monthly income, or a combination of all 3.
All right.
So if someone was looking for monthly income and they had available to them, say, a couple $1,000 a month, but they only needed $500, they could take $500 a month in the monthly income, but still have a line of credit to draw on in case of emergencies.
Okay. So that brings up a good point. So a person can conceivably set up a combination. They could say, gosh, I'd like $1,000 a month, but then over here they have a $200,000 or $300,000 line that they could draw. If they needed $50,000 or $20,000 another time, they could take that.
That's correct.
And use that.
Yes.
Let's say they decided to take $1,000 a month, Bill. Does that just continue until you tell them to stop, or how does that work?
Well, there are 2 ways to do that. You can take it for a limited period of time if you need a little more money, say, for the next 5 years, or they could take for a term.
Okay.
I mean, for their life.
Got it.
And get that for life until they move out of the house.
Very good. This is a really, really important topic and product. The reason I say that is because most of these people, we talk about this all the time, but, in many cases, they work their entire life. They've lived in homes for years. In many cases, people don't have pensions. They just rely on Social Security. Sometimes they may not be able to save that much, so they don't have that much retirement. I mean, we know the statistics. I think it's less than 10% of people. I hear the number all the time. Less than 10% of people are actually prepared for retirement. So what that tells you is there's a lot of people that go into their senior ages that don't have that much disposable income. So this is a product that Bill's talking about today that could help alleviate some of those problems. And you and I talked about this, several times, Bill. One of the things it's sad for me to see, and you see it firsthand because you deal with people all the time, is someone, by gosh, that, great citizen, worked their tail off their entire life, maybe both as a couple, did what they were supposed to do, paid their taxes, and now they're sitting on this home, and they can't do anything. They can't take vacations. They can't go visit their grandchildren. They can't help for their grandchildren because they're strapped for cash. And so, not to be dramatic, but these are the kinds of things that happen, right? I mean, these are the kinds of things that people could access equity and do these things with.
That's exactly right, Joe. The important thing, I may have misguided some people. So long as both husband and wife are 62 or older,
okay,
that reverse mortgage stays in place until both have left the house permanently. So that if, like, the husband were to pass away before the wife, she still has that reverse mortgage, still has the income,
got it,
still has line of credit, whatever she has going for her,
okay,
and it stays in place until she moves out.
Very good.
Permanently.
All right, we're going to take a quick break. We're going to come back, continue our conversation with Bill Benson about reverse mortgages. Bill, before we go, for anyone that wants to reach out and contact you, questions about reverse mortgages, what's the best place to reach you?
Best place to reach me is at my home office.
Home office.
Home office. I work from a home.
There you go.
And that telephone number is area code 408-378-6603. And if my wife answers the phone, she's used to taking calls, and she's a great secretary. So her name's Diane, so she just say, Diane, I need to talk to Bill. If I'm not home, she'll be happy to take a message.
Or normally what I say is, Diane, I realize you're the boss, but can I talk to your employee, Bill? Is he around somewhere?
That's a good approach because she is the boss.
All right, we're going to take a quick break. We're going to come back and talk about reverse mortgages. This is Joe Kuchera with Real Estate Radio Live. We'll be back with you in just a minute.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com.
Getting ready to buy or sell a home in 30, 60, or 90 days? Check out BundleSelect.com to find out how you could save 20% or more on your entire transaction, real estate, lending, and title. With BundleSelect.com, technology and a personal concierge are at your service to save you time and money. BundleSelect's hand-picked team of experts will compete for your business so you'll save thousands of dollars by bundling real estate, lending, and title services. BundleSelect.com gives you all the control, including using your own realtor. I'm Joe Kuchera with Real Estate Radio Live, and I have been on the radio educating consumers for years. I'm here to tell you BundleSelect.com is the best way to save money on real estate. By bundling services, you could save tens of thousands of dollars. This savings model could save you money on your move, lower your interest rate, or cover your closing costs. Visit BundleSelect.com. That's BundleSelect.com.
The estimated minimum savings are based on a comparison with the national average. Individual results may vary, and the estimated savings are not guaranteed. Bundle Select Inc. is a licensed real estate broker. California Bureau of Real Estate Broker license number 004666902.
Welcome back to Real Estate Radio Live. For more information on today's topic or guests, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for today's edition of Real Estate Radio Live, Joe Kuchera.
Welcome back in. Joe Kuchera with Real Estate Radio Live. We have in studio today our friend Bill Benson, who is a reverse mortgage specialist. Usually checks in with us every couple of months. Gives us an update to talk about this very important topic and product that's out there that is it's just, I can't really overestimate, however you want to say it, the value of a product like this that helps people take a lot of relief and pressure off them financially at a certain point in their life, when it's possible for them to do it. You have options, and this is certainly one of those. So just to kind of summarize, Bill, reverse mortgage, 62 or older, you have three options. You could do a lump sum cash out, you could do a line of credit, or you could do like a payment distribution.
Monthly income.
Or you could do like a combination of all those types of things. You could use the money for anything that you wish, and the loan stays with the property until such time you would pass away. Is that correct?
Or move out permanently.
Yeah. So I'm assuming if a person goes to sell the home and they have a reverse mortgage on the property, or what happens at that point? Do you just pay it off like any normal loan? If the house sells for $1 million, you have a $500,000 loan and pay it off and move along?
Exactly right, okay. Joe. Exactly.
So no different when it comes to payoff.
No difference, except one thing. I should touch on this. I mentioned that this is an FHA product, but there's also a jumbo, a proprietary product now. It used to be very expensive. It's become much, much less expensive and much more workable.
Okay.
In the case of the FHA product, we're limited to a certain degree in the value. They set the highest value by county around the country.
Okay. So
that if you're in an FHA product and the time comes to move out permanently, whether it's due to the death of the final partner or to move out. But now, we've had tremendous property appreciation. That isn't going to last, and there have been times, people forget, but there have been times where we've had pretty good corrections in property values around here. If the senior has outlived the reverse mortgage, in other words, lived too long, and the value and the amount of the mortgage has grown because there's been no interest paid on it, and it's been accruing, and now we have a big decrease in value, there could be, and there has been in the past, situations where now the property is worth as much as the mortgage, where it's a deficit. In that case, part of the FHA program is that they insure the property so that the family, and it's a non-recourse loan, the only recourse that the lender has is the property itself. If the property were to be sold at a loss after the seniors had moved out, then FHA would step in and pick up the difference.
Okay.
And that's important for the heirs to know because they are not on hook for anything separate, anything additional than the value of the property.
Got it. So just kind of refresh or go over a couple of details. With the reverse mortgage, it may sound common sense again to some people, but it's confusing if you don't really understand. So the whole idea, Bill, is that, to explain it, I think, in kind of common sense terms, is if, let's just say you have a payment of $2,500 a month in this reverse mortgage payment. So since you're not making that payment of $2,500 a month, that $2,500 a month, in essence, just gets added to the principal balance each month? Is that how that works?
That's correct.
Okay.
Yeah.
Along with, now, there is mortgage insurance as part of the FHA program as well, right?
Yes, it is. It's a small fee monthly.
Yeah. But so that payment accumulates on your principal. So let's say you start with a principal balance of $300,000. In just simple terms, again, $2,500 a month would have been your payment. You're not making that payment, so that goes to that principal balance. And then over a period of time, that just grows because you're not making the payments, but the principal is growing because of that.
That's correct.
Okay.
That's correct. Just
wanted to be sure. Now, talk a little bit about, I understand there's a reverse mortgage for a purchase. And I think that confuses people sometimes because they think, well, how does that work? How do you do a reverse? Because, they're used to in your home, getting cash out, right? So can you kind of walk us through how the reverse mortgage purchase works? Or is that a little bit more complicated?
It's a little bit more complicated, but not bad. No.
Okay.
And the reason you might want to do that is, you've had a nice home in the hills.
Yeah.
And now it's time, 2-story home.
Yeah.
A lot of stairs. Now it's time to downsize. And so you've sold your home, paid off a sizable mortgage.
Okay.
And now you're looking for a smaller single-story home that's more manageable. You don't want to use all the funds that you've taken from the sale of that mansion you had. You want to use that for some other investments or whatever.
So let's say you sell it for $1 million and you want to use $500,000, for example, something like that, right?
Well, say you walk away with $1 million and you want to use $500,000 for the down payment.
I see.
And now, if you're looking at a $700,000 or $800,000 home, then you could do a reverse mortgage for that $200,000 or $300,000.
I see.
And have no obligation to a payment unless you wanted to make the payment.
Okay.
There's no obligation to a payment, but you can make payments against a reverse mortgage so that the balance does not grow or at all or rapidly.
Is this the perfect product for everyone, or is this a situation where you as an expert, you sit down and you find out the details, you hear the story, and you determine whether this is the right thing for, because it can't be for everyone, right?
Hey, Joe, absolutely right. I tell everybody that. It's not for every senior.
Right.
And they should look very, very, very closely at it. I just told the story where I've got kids coming in to sit down with their mother and I always encourage them before making the final decision to fully discuss it with their family.
Right.
To sit in with me, if I encourage that.
Mm-hmm.
To have them question me.
Mm-hmm.
And there are other safeguards built into it. For one thing that's important to know is that before they can have a reverse mortgage,
mm-hmm.
they have to go sit through an outside counseling session with experts who are been trained in this counseling. They're typically people who have been in like credit counseling
mm-hmm.
positions.
Right.
But it's their job to make sure that the senior really understands what they're getting into, and they're not getting scammed. Seniors tend to get scammed. And what they're doing is they're protecting the seniors from me.
Right.
Okay?
That's true. Yeah.
Okay.
Yeah.
Not that they need that protection, but that is the point.
Right. So there's a process you have to go through. There's a counseling. You get the children involved, the relatives involved. So are there situations too, Bill, where let's say a child or a grandchild comes to you and said, listen, I need to get a reverse mortgage for my grandparent or my parent, and they're incapacitated to a certain extent. In other words, they can't make final decisions on their own. So is that done through power of attorney in different ways? How does something like that work?
Yes, it is.
Okay.
There are certain restrictions on when the power of attorney was done. Let's take someone who is, starting into dementia.
Right.
The power of attorney has to have been in place prior to the start of the dementia.
I see. Okay.
We document that with doctor's letters
mm-hmm.
and that sort of thing. If that's not the case, then it can still be done through legal process.
Okay.
And it's a little bit more difficult, based by probably 60 days, but it can be done, but it's handled very, very carefully.
Okay.
And once again, handled very, very carefully to be sure that someone with dementia is not getting caught.
Taken advantage of, right. That's a good point. So that brings up a good question. How long is the typical time from start to finish to a reverse mortgage? I know it depends on how quickly people get paperwork to you and that, but kind of in general, what can a person expect from counseling to close, roughly? Once
the counseling is finished, 45 to 60 days.
Okay. It's good to know. And then as we wind down too, Bill, let's say in a reverse mortgage, this has come up before, either the person, the couple, individual, or as a couple, they pass away, and now, the home is in a trust, and it goes to their children or whoever it goes to. How does the bank handle that when there's a reverse mortgage on the product? Do they have a certain amount of time to either sell it or refinance and get out of it? How does something like that work?
Typically, there is a 6-month period they have to get a house sold.
Got it.
No problem at all getting another 6-month extension.
Okay.
And the lenders don't want to foreclose on a home.
Right.
And so they'll give them whatever time they need. But
mm-hmm.
they also are obligated to stay on top of it.
Mm-hmm.
And I always tell my seniors and their family that it can be a little annoying because
mm-hmm.
they want to be sure that you're moving ahead with either refinancing the home to get the loan paid
mm-hmm.
off or to getting it sold.
Yeah. So before we go to last question for you, I always like to ask, why you? I mean, I know you. I've known you for years. You do a great job. You take very good care of people. You live what you talk about. You have a reverse mortgage. You know it. You understand it. You're compassionate for people. But what makes your company different? There's a lot of advertising on TV and the radio and internet. What would you say to the consumer saying, Bill, I know you, but who's behind you? What's the company behind you? How could I trust that?
Well, I'm with a company. It's a group of mortgage brokers.
Okay.
And our home office is down in Southern California,
mm-hmm.
Calabasas. But we all work independently.
Mm-hmm.
The founder of the group was on the first board of directors for the National Reverse Mortgage Lenders Association, which is our trade group.
Right.
And he's been in the business since day one, since reverse mortgages first started.
Okay.
Very, very fine guy, highly ethical. And, Joe, you already just said what a wonderful guy I am.
It's true.
But I like it. I've been with the largest reverse mortgage lender in the
mm-hmm.
country. Highly ethical people, too, but they were always pushing to get more done. And I was uncomfortable with that because I feel that, I won't go into it. I don't think these things should be pushed. I think it's my job to educate people, not to sell them. And that's
I agree.
a little difficult for me. I told you I've been in sales all my life.
Well, no, I'm glad you finished up with that, Bill, because that's a good point. Let's face it. I know, we all know companies, they have to be profitable and they have to answer to their board of directors and investors and all that stuff. But that is a slippery slope when you're talking about, hey, come on, we got to get the numbers up on these reverse mortgage. This is not something you go out and pressure sell with, and you could say that to a certain extent for regular mortgages, right? But the difference is you got to really be careful when you're trying to talk someone into something to make your sales look better. And that's not the product to me that you need to be going to do that. It's for the right person for the right reason. Before we go again, Bill, best place to contact you, number if someone's interested in reverse mortgage.
Once again, my wife's name is Diane, and she might answer the phone. That number is 408-378-6603. Incidentally, our group we are Senior Funding Company.
Got it. Senior Funding Company. Yeah. Okay. Thanks, Bill. Another good show, good information. Appreciate it.
Thank you, Joe.
Yeah. This is Joe Kuchera with Real Estate Radio Live. Thanks again for checking in. Thanks to Bill Benson for sharing some information about reverse mortgage. For more information on the show, you could always go to RERL-1540-Bill. Take care until next time.
You've been listening to Real Estate Radio Live. For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Subscribe to our podcast. Discover more at RERadiolive.com.